You're watching the latest financial news with VEVOFX. It's Wednesday, the 22nd of November 2023. So, is the great reversal finally here? The market has been reacting strongly against the dollar, raising speculations that the Federal Reserve's interest rate hike cycle has finally ended. The dollar, also known as the greenback, found itself in a downtrend, lingering near a low not seen in over 2 months against major currencies on Monday. Its struggle to gain strength stems from the prevailing sentiment that US interest rates have reached their peak, leaving investors anticipating the Federal Reserve's potential shift towards easing monetary conditions. And over in Asia, all eyes were on China's pivotal rate decision, where expectations lean towards Beijing maintaining its lending benchmark rates during the Monday fix. And meanwhile in Europe, the euro, having reached a more than 2-month high last Friday, held steady at $1.09 as it awaited the upcoming flash PMI readings for the Eurozone later in the week. Well, the dollar index, measuring the greenback against a basket of 6 currencies, inched up by 0.04% to 103.95, struggling to break free from the lows it reached last week at 103.79. Marking a nearly 2% decline, its steepest weekly drop since July. Well, this decline followed a series of disappointing US economic data, particularly a below-estimate inflation reading, causing markets to recalibrate expectations and, of course, to rule out further rate hikes by the Fed. Well, attention has now shifted to speculation about the timing of potential rate cuts, with futures indicating a 30% chance of the Fed initiating rate reductions as early as next March. That's according to the CME FedWatch tool. Well, the weakened dollar provided some relief for the Japanese yen, which held its ground on the stronger side of 150 to the dollar. Sterling, meanwhile, dipped slightly to $1.2454.5, but remained close to the 2-month high of $1.2506 reached the previous week. Well, looking ahead to China's loan prime rate, the LPR decision later in the week, the offshore yuan hovered near a 3-month high against the dollar, standing at 7.2214 to the dollar. But on the other hand, the Australian dollar, often seen as a liquid proxy for the yuan, slipped 0.17% to $0.6504, while the New Zealand dollar edged down to 0.04%. That was down to $59.90. And meanwhile, Commonwealth Bank of Australia's currency strategist Carol Kong noted that market pricing for FOMC policy was likely to remain stable throughout the week, suggesting few catalysts for significant dollar movement. Kong added that an improvement in risk appetite could potentially lead to further weakening of the dollar. And on Monday, the dollar index extended its decline to reach its lowest point in over 2 months, continuing a slide that began in the previous week. The prevailing sentiment amongst investors is that the US Federal Reserve has concluded its interest rate hike cycle, prompting speculation about when the central bank might initiate rate cuts. The dollar index touched a low of 103.37, that's the weakest level since September the 1st, following a nearly 2% drop the previous week. That's the most substantial weekly percentage decline since mid-July. And despite recent comments from some Federal Reserve officials not ruling out the potential need for more rate hikes based on economic data changes, the market perception leans towards a shift towards rate cuts. And Richmond Federal Reserve President Thomas Barkin remarked on Monday that inflation is likely to persist, suggesting that the central bank might need to maintain higher interest rates for longer, or at least for a longer duration than currently anticipated by investors. The upcoming release of minutes from the Fed's latest meeting, scheduled for Tuesday, will be closely scrutinised for any indications regarding the central bank's future policy trajectory. Facing a weakened dollar, the euro reached its highest level since August the 15th, reaching $1.0952. Simultaneously, the yen strengthened to a 6.5-week high of 148.09 to the dollar. Against the yen, the dollar was last traded at 148.36, representing a decrease of 0.84%. The euro's ascent has been fueled by expectations that the European Central Bank, the ECB, will maintain its rate hike cycle after the Fed has completed its own. The pound exhibited strength, trading at $1.25, marking a 0.36% increase on the day and reaching a two-month high of $1.2518. Overall, the dynamics in the foreign exchange markets indicated a shifting landscape with a weaker dollar, heightening anticipation of Fed policy adjustments and positive developments contributing to the strength of other major currencies. So, in summary, to wrap up this week's report, the dollar struggle persisted, influenced by the perceived peak in US interest rates, while global attention focused on key economic indicators and central bank decisions that could shape the currency landscape in the coming weeks. So that's it. Do let us know your thoughts in the comments below, and if you'd like to keep up with the latest Forex news, do click on that subscribe button, and why not give us a like whilst you're at it. But in the meantime, thanks for watching, and we'll see you next time. This has been the Quick News brought to you by VEVOFX.